moment to talk about Advantage Lithium and our flagship Cauchari Brine lithium project in northwest Argentina. In advance of going through that, I thought it would be instructive to just spend a couple minutes going through some of the supply, demand, and pricing dynamics in the lithium market today. So here we have clearly the demand for lithium is being driven by lithium-ion batteries, principally from electric vehicles. Here is a survey showing the range of forecasts for demand going out to 2025. And as you can see, even on the low side, we're looking at 250% increase over 2017 production. And on the high side, 430%. So the growth is very significant. And what that really means is over the next 10 years, you're going to need $10 to $12 billion of investment to bring the supply to meet that growing demand. This growing demand, which is expected to grow again 20% this year, that came from SQM on their call earlier this week, has led to a significant move in the price of lithium carbonate. It's up about threefold over the past 3 years. And so the offshoot of that is that lithium producers, lithium equities, have performed very well. So this is 4 North American listed lithium producers, which are up about 105% on average over the last 3 years. And the same thing can be said, obviously, for developers. So these are 4 of our peers, all TSX-listed lithium brines, and they're up on average 87%. And so the high pricing, of course, has triggered a supply response, naturally. And so there have been announcements over capacity expansions, development projects coming online, and a flurry of exploration activities. Most notably, Morgan Stanley in late February came out with a highly criticized report calling for the long-term pain of new supply. And this had a pretty significant effect on lithium equities. So here you can see the producers around that time are down about 30% peak to trough. The developers were even harder hit, down about 40%, 49%. But as you can see on the bottom, particularly here, some of these equities are starting to base out and in fact moving up quite aggressively. And what that is people digging into the oversupply concerns and recognizing that supply doesn't come online as anticipated. So for instance, Roskill, internationally recognized mining consultancy, in 2012 called for a tripling of lithium supply into the market. In actuality, only 33% of that target was met. This chart on the bottom again shows planned capacity in 2012 and what actually was delivered. Bringing battery-grade lithium onto the market is a very challenging endeavor. And so what's happening in current pricing? Well, all the North American listed lithium producers have guided to higher prices this year. FMC, which is one of the larger producers, actually guided to higher prices through to 2020. And ALB, most interestingly, is now saying that their customers are asking for 10-year extensions to contracts. These are all bullish signals. What is the market activity telling us? There are a lot of Wall Street Journal, Financial Times articles talking about the race to lock up lithium assets. This is what it looks like. So this is the past 18 months. This is a list of offtake agreements for Tier 1 lithium assets that have been done. As you can see in the column highlighted in the red, the majority of these are Chinese groups. And the same thing can be said for strategic acquisitions and investments in the space. These are activities that are accelerating in pace. And again, on the left-hand column, you can tell these are largely large Asian companies. And so we think this is, in general, a good time to invest in lithium. We think these oversupply concerns are overdone. We think developers offer a relatively more attractive valuation prospect. And we think investors should look for high-quality assets, strong technical teams and partnerships. And again, for protection on the downside, we think investors should look for lithium projects that can produce in the bottom half of the cost curve. And this is what Advantage Lithium presents. So who we are, we're the 75% joint venture owner of the Cauchari lithium brine project in Jujuy province, Argentina. This is known as the Lithium Triangle. Earlier this week, we announced an updated resource. It was a 6-fold increase to the resource that we had acquired. We have 3 million tons of very high-grade lithium with low impurities. We have a very strong joint venture partner. The 25% joint venture partner is a company called Oro Cobre. They're the first new lithium brine producer in the past 20 years, and they're operating 17 kilometers north of our project. In addition to having Oro Cobre in the same basin, we are neighbors with Lithium Americas, which is a TSX-listed 700 million market cap company, and SQM, which is the world's leading lithium producer. So as a result of being in this very active basin, the infrastructure is quite excellent, and we're going to be able to lever off that as we develop our asset. In addition to which, our joint venture partner, Oro Cobre, who produces in the basin, who's been there for 11 years, they have very strong community relations and very good relations with the governing authorities in the province. So again, this kind of just highlights where we are. We are in the green here. The 25% owner of our joint venture, Oro Cobre, is up here. They're producing right here. And Lithium Americas and SQM, their joint venture is here, and that's currently in construction phase. So this slide is supposed to provide you with a look to how much capital is going into the basin. Over the next 24 months, about $600 million US has been earmarked to expand capacity up here and to begin construction here. Our technical team is quite impressive. The company is headed up by David Sidhu, who is the founder of the company, is probably well known to a lot of you. He's previously an investment banker and a resource developer. Most recently, he was the founder of American Oil and Gas, which he sold for $630 million. On the technical exploration side, Miguel Perel heads up exploration. He's an Argentine, and he worked for our joint venture partner, Oro Cobre, and was instrumental in the discovery of their deposit. Andy Robb, our VP Project Development, he's a 40-year veteran of the mining industry and spent the past 5 years working on lithium development projects in Argentina. And rounding it off is Murray Brooker, who's our hydrogeologist. Again, he's an import from Oro Cobre, and he worked on their flagship asset. In addition to the bench strength on the technical team from Advantage, we have the unique opportunity to lever the strength of our joint venture partner. Again, they've spent 11 years in this basin. They're the first new brine producer in the past 20 years. They have a wealth of knowledge about the chemistry and the hydrology and the communities and the governing authorities. So Advantage, our long-term goal is to be a producer. We're going to be targeting 20,000 tons per annum. We're going to be putting out a PEA in July of this year, targeting first production for 2021, and we want to establish ourselves again as a low-cost producer. This is a chart provided by Canaccord, and it shows where our partner Oro Cobre sit on the global cost curve for lithium. And given the similarity in terms of infrastructure, in terms of chemistry of our brine, we think we'll be right beside them here in the bottom quartile of the cost curve. So upcoming project development milestones, it's going to be a busy next 12 months. Again, we've engaged Worley Parsons to complete a PEA on the project. Expected time of completion in July. Phase 3 of our drilling campaign is ongoing. We currently have 3 drill rigs. And the objective here is to, A, grow our resource, as well as uplift it to measured and indicated. That data will then feed through to an updated resource estimate again early in 2019. That information will be fed into the DFS, which we target for completion in Q2 2019. So the capital market snapshot, we're a 150 roughly million market cap company, just under $12 million of cash in the treasury, so well funded through to 2019. Shareholders consist of Oro Cobre, our joint venture partner. They also own just under 30% of the equity. Management and insiders have a big stake of 22%. On the research side, we have National Bank, Cantor, 8, Joe, and we expect a couple more over the coming months as we put out the PEA. So what is the investment case here? I mean, it's pretty simple. These are the companies operating in our basin. We are a developer, LAC is a construction-ready project, and Oro Cobre is a producer. And so we think as we de-risk this project through the next 12 months, our valuation will start to reflect that more closely enjoyed by LAC. So on an EV per ton basis, for instance, we're trading about 66 per ton of lithium carbonate equivalent. LAC is a construction phase company and trading at twice that. So that's it. Thanks again, Joe, for the opportunity to speak here. Happy to take questions later. Thanks.